myself Vaibhav. In our today's session of Market Movers, we will take a look on the USDJPY, which increasingly looks in the bear grip. This fall, which started closer to 107, has now extended to more than 150 pips. And at the moment, the USDJPY is trading closer to 105.40, which is the lowest level for today's session. And it increasingly looks likely that this bearish trend is likely to continue, and that will present us with the opportunity to adapt a sell on rally approach. So we will see some optimum levels. We will try to figure it out and go for the trading opportunities if any. If you consider the trading context for the day, there is not much on the data docket apart from this Reserve Bank of Australia's monetary policy meeting minutes. We saw that RBA has said that there is no immediate need for further monetary policy easing. Of course, they are going for additional bond buying, but they have not tinkered with their interest rates. And as the current situation stands, they are going to simply target the cash rates closer to 0.25% and hold the monetary policy in status quo. So there is no immediate change, and the RBI is hopeful of the economic recovery, at least for the time being, some stabilization as the coronavirus epidemic gets in control. So a lot is going to depend on that, and then the RBI stands ready to act accordingly. And as I said, there was not much on the data docket for the European session. And then if we move on to the North American session, just a while back we got this housing data for the United States, and we have got substantially higher numbers. We got robust housing data for the United States, and it is indicative of the fact of the US economy's strength even in face of this widespread coronavirus outbreak. If we consider the housing starts, they have grown 22.6%, whereas the expectation was of only 2% growth, and it is also higher than the prior month reading of 17.3%. Even more building permits have issued, even more than the expectations, and now for the month of July, we have seen building permits being issued at 1.495 million, and the housing starts also almost closer to the number at 1.496 million. So the housing data is pretty strong, I would say. Now let's move on to the technical aspect here, the USDJPY, and then it will be the turn of gold. Gold is having a golden run, and after getting this correction again, it has rebounded to about 2000 level. So we will see what are our chances in this new rally. Let's first start with the USDJPY's technical outlook. This is the daily time frame chart, and after finding resistance around 107 level, the USDJPY has not taken much time to give up its prior gains. The gains were also kind of sharp, and the losses have been also sharp and sharper than the gains. As you can see that it took almost 5 to 6 trading sessions for the USDJPY to get to these 107 levels after starting close to 105, but in 3 trading sessions all the gains have evaporated, and it increasingly looks likely that in today's session itself it might be heading towards 105. So let's see what is in store for us here. If we consider the larger picture, the USDJPY has been in a downward spiral for quite a while now. After touching the 100% expansion of its prior fall, the USDJPY rebounded, but it was kind of retracement in the larger bearish market, and now again I think this is the resumption of the USDJPY's bear run. So here we will try to see if we have any emerging opportunity for us to get involved. And if we look closely on the 4-hourly chart, we have this now near-term resistance placed at the central pivot point of this month's pivot point series. The central point is at just little above 106 at 106.089, and that is even that level now seems almost 60 pips away. So even if we are going to target that level, we will have to sit on the sidelines and allow the price action to unfold, and let's hope that we see some sort of recovery from the current levels closer to this resistance zone, and then of course we will need the consolidation to take place first before we can jump on the bandwagon for the fresh short selling opportunity. Here the regression curve had turned sharply higher after this swift move on the higher side, but again the price action has now entered in bearish zone, and also here as you can see it has even crossed below the lower band of the regression curve. So I would say that in due course of time, maybe by tomorrow's session, you will see a lot flatter regression curve here. And as I said, it's not really a good idea to go for short sell trades right now. Of course, you can go, but the risk is a lot higher now, and we are likely to see some consolidation after getting too close to this prior swing low area as well. So keeping that in mind, I would say that it will be better if you target the fresh entries anywhere close to this confluence zone of 50 and 200 SMA. We have these cross the 50 SMA crossing below the 200 SMA, that is a death cross, and here this is additional bearish confirmation for traders, and now we have it in place, and that is going to increase our chances of making money in the bearish trade. But as I said, we need to find the optimum levels, and I don't really feel that the current levels are optimum. Here we have this prior a head and shoulder kind of pattern in place, and now unless and until we get the price action above this prior swing high, this price marker which I have placed closer to 106.6, I don't really see a need to panic. Of course we will need to get a good opportunity to get involved for the short sale, and as I said, here this is the zone which we should be targeting. But then for us to get those levels, we will have to wait, and let's hope in today's session, or at least in coming sessions, we will see some sort of retracement taking place in USDJPY, and as long as the price action is below this important resistance zone here, the crucial marker for us, it will keep providing the opportunity to go short. Now let's move on to the gold. Let's see how things are shaping up in the gold. The gold had declined to closer to 38.2% Fibonacci retracement of its rally, starting from 1450 to about 2050, and this sell-off was fairly sharp. And now the rebound is also proving to be equally sharp, and here it hasn't really taken much time for the gold to get back the mojo and again start the run higher, and it increasingly looks likely that it will try to get closer to its all-time highs, this price zone closer to 2070 USD per ounce. And if that's the case, of course our job is to figure out if there are any emerging opportunities for us to get involved, and here the opportunities are of course likely to lie on the long side, the buy trades, and if that is the case, we will have to rely on the lower time frame charts like 4 hourly, and here as we can see, we can expect some sideways price action in the gold as the regression curve has bent on the lower side because of this sharp sell-off. And of course now the price action has rebounded, and the price action is taking place in the upper band of the regression curve, which is likely to force this regression curve to flatten, but that will also give us more time for getting the optimum opportunities, optimum price levels to go for fresh long opportunities. And I would say that we can utilize these consolidation plays closer to 1940 as our immediate marker. Anything above that can be considered bullish, and if these levels actually give way, then I think we need to get out of the trade and sit on the sidelines So this should be the area of interest for us, and 1940 can be used as a deciding marker. And on the higher side, our immediate target can work out closer to this all-time high, this immediate resistance zone of around 2060. We have this first resistance of this month's pivot point series, as well as we have this prior swing high. So that can be the area of immediate concern for us, and it is likely to provide some resistance. And because of that, we can look for getting involved anywhere close to this prior support zone, and then we can go and cut our positioning if the price action indeed goes on to touch this price zone. And for that, for long trades, we will now have to rely mostly on the hourly chart. And here we have this price action which has crossed above and has been able to sustain above this 200 SMA. And in due course of time, we can even expect this golden cross, the cross of 50 SMA above 200 SMA to take place. And then I would say that we can target that price zone closer to the cross. And also we have these upward moving price channel, of which we can use this lower band as our fresh entry point. So keeping that in mind, I would say that we can target the price zone for fresh entry anywhere closer to 1960 or just a little above that. And as I said, the stop losses can be just little below this prior swing low. So entry anywhere close to 1960 to 1970 should be a good idea, but of course, for that to happen, we will have to wait, and we will have to expect the correction to happen in the USD, sorry, the gold in terms of USD, and only then we will be having the optimum opportunity to make money, as our risk will be fairly sharp. We will be taking a risk of around 2 percentage point, and in lieu of that, for the 2 percentage point risk, we will be targeting on the higher side almost 5 to 6 percentage points. And because of that, I would say that if we are going to target the price zone closer to 2060 USD per ounce, we will need to take this risk of around 40 USD per ounce. And because of that, we will also have the good risk reward ratio. So let's see how things shape up in today's session. If we get the required connection, then we can go for a trade in today's session only. Otherwise, I would recommend that it will be better to sit on the sidelines and allow the prices to cool somewhat before we go in for a fresh trade on the long side. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.